Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday, as widely expected, the RBA left interest rates on hold at 1.5%, this being the 27th straight month. The central bank noted that its consistent policy is consistent with meeting its sustainable 2% inflation goal. The Monetary Policy Authority also stated that it sees a gradual pickup in inflation and that the GDP growth will average around 3.5% over the next couple of years. On the flip side, though, the weak inflation and falling house prices, the job market remains active with the unemployment rate falling at 5%, the lowest level since 2012. And the economy is growing in line with the RBA's forecast. However, many economists have expressed doubts about whether the RBA's expected growth trajectory is realistic. Still, with the wait-and-see approach from the RBA, holding a 25 basis point hike for Christmas, December, which is my view at present. So, still left a couple of months to see whether the RBA does change its view to a more hawkish stance. Well, overnight, the Aussie is still maintaining above the 72 cent, and at this stage, it's climbing slightly to the high this morning of 72.43. Nevertheless, I still feel that from this spike or spinning top, that the market has staged somewhat a negative picture to this week. Although the ADX is trending, the RSI is a little bit overbought. I believe that the market will shy away from the 72, 60, 70 level, and I'll put short positions on from there and a stop around 96. It is ascertained that the market will drop back towards 71.90, where the 60-day moving average holds, along with the broad downtrend line, which was resistance but now support. A break beneath 71.90 would give further indication to a bearish case and look towards 71.45 to 70.85. Well, the market is still a little bit unsure in terms of direction as we wait for a little bit more clarity on the election vote that's being processed at the moment. Still, with the dollar being directionless in the last 24 hours, the euro still is contained under the 114.35.55 level, where I'm looking to shorten the market and put stops accordingly around 114.96 or to your risk management. I'm looking for a pullback to the downside with the challenge of this August low of 112.95 and reassess from there. Well, dollar yen's finding a little bit of pace at the moment and looking towards that level of 113.65. I'm not overly bullish. This RSI and also the MACD is a little bit lacking, to say, of momentum. So therefore, I do expect to see a pullback. Little has changed though for dollar yen as the market looks for clarity on the US election, with Democrats are expected to take control of the House away from the Republicans, while the GPO maintains a slim majority in the Senate. Most analysts view a potential split Congress, which is most likely the outcome, but the probability of a Democrat in the House appears to have diminished. However, the election could lead to more investigation in terms of Trump's position, but nevertheless, it depends on who gets in, and we will see very shortly. As I say, I'll be looking for a pullback to 112.95 to 112.35. The pound is getting a little bit higher and now taking out my level of 130.70 with my stops loss nearly being triggered, which is around this level of 131.20ish. If we go above there, then I'm neutral, and I would rather sit out and see what happens with this Brexit as the market continues to play havoc with the results of any published newspaper on the Brexit outcome. It is assessed, though, that while maintaining around this level of 131 figure 20, that we could see a pullback to 130.60, but this looks very slim now. Well, the gold did slip, and also quite substantially, from the highs of 1,235 to 1,223 this morning. With the dollar index trading sideways, the market is still a little bit unsure due to the fact is that we do have the FRMC meeting this coming week. It is likely that the Fed will sit unchanged, as widely expected, but look to a fourth rate hike in December. So we'll see how that comes out. For now, I'm looking for a pullback towards 24 to 16 and resistance around 35 to 38. Well, the market took a stab to the downside and respects that level of 61, 40, 60, but we're still not out of danger zone yet. I view that the potential rebound could come back to now of a target of 64.5. So I am getting a little bit bullish at these levels, and I do expect to see 61.40 hold and see the bounce. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.